Welcome back to the Should You Read series, this one being The Dhandho Investor by Mohnish Pabrai. So what's in the book, The Dhandho Investor? The chapters dedicated include the first 3 chapters, which are backstories for the Dhandho framework, followed by, of course, the chapter for the Dhandho framework, where this goes about what is a good and what is not a good investment, very generally. Following that, it goes into more detail with Dhandho 101, invest in existing businesses, Dhandho 102, invest in simple businesses, Dhandho 201, invest in distressed businesses, 202, invest in businesses with durable moats, 301, few bets, big bets, infrequent bets, 302, fixate on arbitrage, 401, margin of safety always, 402, invest in low risk, high uncertainty businesses, 403, invest in copycats rather than the innovators. And then we have Abhimanu's dilemma, the art of selling. The question of to index or not to index, that is the question. And then we have Arjun's focus, investing lessons from a great warrior. As usual, we'll start with what I didn't like about the Dhandho Investor. And the first of which is the length was pretty short. There were only 183 pages, and all the pages that I had were big print with lots of spacing, which means that it was significantly less than 183 pages compared to what I typically read. I would have preferred he was more expansive when writing or perhaps included more topics. The second thing that I didn't like about the Dhandho Investor is that most of the better chapters are past the beginning portion. And while this didn't matter in my case since I was going to read through the whole thing regardless, others might be put off by this. They are supposed to be the backstory on why he has his views on the Dhandho framework, which I understand, but I know that having the stronger chapters in the beginning makes it so that people are more enticed to read through the whole thing. Next, we'll go into what I liked about the Dhandho Investor, and the first of which was the references to other investors. Throughout the book, his points will be backed up with quotes from other famous investors: Benjamin Graham, Peter Lynch, Warren Buffett, and so on. It's a way of cementing his point on value investing by referencing other value investors and what they say. The second thing that I liked was showcasing discounted cash flow analysis. It's rare to see in investing books, so this was well appreciated. Examples shown with gas station businesses, fixed yield investment, and a publicly traded stock. The third is the importance of using probability percentages to calculate value. He says to focus on low-risk, high-uncertainty companies as part of his Dhandho framework. So during discounted cash flow analysis, it's using different probabilities of future outcomes to determine value, instead of one set DCF model. What in my opinion are the best chapters? For the top 3, the number 1 best chapter is Dhandho 102, Invest in Simple Businesses. The second best is Dhandho 301, the Few Bets, Big Bets, and Infrequent Bets chapter. And number 3 is Dhandho 401, Margin of Safety Always. Going deeper into the third best chapter, the Margin of Safety Always, the main idea is the importance of buying below intrinsic value, the risk and returns associated, and the benefits of doing such. And there's lots of references to Benjamin Graham's Intelligent Investor located inside. For the second best chapter, the Few Bets, Big Bets, and Infrequent Bets, the main idea is using percentages and multiple DCF analysis to determine price, not just one DCF model. The future is unknown, so the discounted cash flow used to determine value should represent that using a percentage-based approach on what is most likely, somewhat likely, and not very likely. And for what I think is the best chapter, it's Dhandho 102, Invest in Simple Businesses, where the main idea is what is the DCF model, the discounted cash flow model? What are some examples of using it? Where in this chapter he used the gas station, which was a simple business that most people are familiar with, and how they make money, the fixed yield bond, and also a stock. But of course, this isn't a question of if I should read this. The question is, should you read the Dhandho Investor? For people that I think this book is for, it's people who want to be value investors, and someone who wants to learn about the DCF model method of valuation to determine intrinsic value of a stock. Investors that like Benjamin Graham's method would also very likely appreciate the Dhandho Investor's book. People who this book might be for is somebody who already knows about discounted cash flow, but wants perspectives on what generally good businesses are. Investors that like listening to what the, in quotations, value investing gurus have to say. People like Buffett, Graham, Peter Lynch, Mohnish Pabrai, and so on. People who this book is definitely not for, though, is people who are looking for personal finance advice. Anyone using technical analysis or any other non-value investing analysis, or investors that believe in efficient markets and indexing. If you're interested in reading or listening to The Dhandho Investor, I have a link for this book in the description down below. If you enjoyed the video, hitting the like button would be greatly appreciated. And if you're new here, subscribe and hit the bell to stay up to date on other future videos that I'll be making. Thank you so much for watching, and I hope to see you in the next episode.